The spike that drove gold's price to a new record high levels tended to underscore the wide volatility characterizing its price action and the possibilities for gold traders. Today we are to discuss the fundamentals that underpinned the rally, while also have a look at the challenges laid ahead for the precious metal, but we'll be concluding the report with a technical analysis of gold's daily chart. Monday's rally may have been in the works for some days now, and it's characteristic how our last report ended with a clear-cut bullish outlook for the precious metal. On a fundamental level, we note that the market's expectations for the Fed to proceed with consecutive rate cuts in the coming year seem to intensify, which in turn also tended to highlight the possibility of US bond yields to drop, polishing the shiny metal even further. In any case, Fed Chairman Powell's speech last Friday was pivotal in the sense that despite the Fed Chairman stating that the rates are well in restrictive levels, implying that the Fed is done with hiking rates, also tended to imply that the bank may keep rates at high levels for a prolonged period. Yet Powell failed to convince the market, and should the market's expectations for a considerable easing of the bank's restrictive monetary policy in 2024, we may see gold's price being on the rise once again and vice versa. Overall, we note the absence of any statements of Fed policymakers in the coming week, given the blackout before the bank's 30th of December interest rate decision. Hence, we expect gold's price to be led by fundamentals as well as financial releases due out. In the coming days, we highlight of the week the release of the US employment report for November on Friday. Should the release take the market by surprise, we may see it having ripple effects in the gold market as well. If the data show an easing of the US employment market's tightness, adding more pressure to the Fed to proceed with rate cuts earlier, that could provide some support for gold's price and vice versa. On a deeper fundamental level, we note that the preceding analysis implies a continuance of the negative correlation of the dollar with gold's price. The past 3 weeks seem to verify the validity of this negative correlation, as gold was on the rise while the greenback tended in an inch lower. Yet the dynamics seems to have eased a bit, as the rise of gold's price seemed to be a bit asymmetrically wider in relation to the weakening of the dollar index. On a technical level, gold's price rallied, reaching all-time highs, peaking at $2,136 on Monday's Asian session, yet corrected quickly lower by retreating beneath the 2,048 support line, now turned to resistance. In its correction lower, the precious metals price seemed to have broken the upward trend line, guiding it since the 13th of November. Furthermore, we note that the RSI indicator retreated below the reading of 70 and seems to be stabilizing above 50. We tend to switch our bullish outlook, given that the pre-mentioned upward trend line seemed to have been broken, in favor of a bias for a sideways motion for the time being. Nevertheless, we note that the bullish tendencies are there, given that all three moving averages on our chart are pointing upwards. On the flip side, the precious metal price is still at relatively high levels and may have more room to move the downside. Should the bulls regain control over gold's price, we may see it breaking the 2,048 resistance level and aim for the 2,078 resistance nest. Even higher, we note the 2,104 hurdle. Should the bears take over, we may see gold's price breaking the 2009 support line and aiming for the 1,987 support level, a scenario that would allow us to draw a downward trend line, showing also the limitations of a possible downward movement. Even lower, and for a more bearish scenario, we note that the 1,095 support barrier. Thank you for watching.